a comeback with all the defense names. In fact, let's welcome on board Sudeep Bandyopadhyay. And Sudeep, hi afternoon firstly. This brings me to days like yesterday when you had Cochin Shipyard come out with negative numbers, or rather weak numbers as per market anticipation. And you got that one-day opportunity of weakness across defense names. Do you think it's a given, while it's a structural play, that any dips should be bought into defense names, although selectively?
Absolutely correct. Selectively, and only if you are in it for long term. See, I don't want to get into the valuation and the challenges as far as valuation is concerned, but the fact remains that defense is a long-term structural story, and if you want to participate in that story, get into it, take the opportunity of any dip, but plan to remain invested for long term. And here, the long term means 3 to 5 years. Look, like Bharat Dynamics, they've won an order, but the order delivery will not happen next quarter or the quarter after that. It will take some time, particularly look at the shipyards. Manufacture a submarine or deliver a submarine or a ship takes quite a lot of time. It's more than a year. So one has to be prepared to, stay with the company for a certain amount of time to benefit out of these. Of course, short-term fluctuation movements do happen, and from a trading point of view, you can enter and exit. But if you're an investor, enter, take an opportunity of a dip, and remain invested.
And Sudeep, is there a tilt you have, public sector versus private sector within defense? What is it that you prefer?
Well, at this stage, Harsha, I do like private sector because of the sheer fact that PSU defense companies have run up too much, and the valuations really look stretched. Considering the financials they're delivering, the growth they're delivering, of course the potential is humongous, and it will be achieved over a period of time. But if you have to pick up one stock, probably I'll go and pick up Bharat Forge. I think they have, the earnings call. It was very clear they're focusing on domestic defense orders and contracts, and they're scaling up rapidly the domestic business. I think that's an interesting play at current level. If I have to stretch a bit, then I'll go and buy Larsen as well. It's one of the largest defense companies in India, participating in multiple defense contracts and delivering commendable performance from defense segment as well. We talk about it separately because the other businesses of L&T are too big, but defense itself is also becoming big within L&T. So yeah, I don't want to go to the small private sector companies where again the valuation is a challenge. I would rather play through Bharat Forge or a Larsen to grow the defense story also.
That's quite interesting. In fact, on the subject of L&T, after being quite an underperformer and a lag for quite some time, finally L&T has also begun that move. Kunal, what's the reading on the charts for L&T? And let me throw in a Bharat Forge as well in there.
So yeah, I think L&T is one which has done reasonably well, trading about closer to that 4,000 mark right now on the spot levels, and looks to be quite strong on the charts. But Bharat Forge, I think, is something which is very interesting because after the last 12 months of price performance where the stock was into a downtrend, finally we've seen signs that the stock is emerging out of this bearish trend as such for Bharat Forge. The stock scaling past levels of 1,300 very recently. There is also a formation of a cup and handle pattern for the stock on the weekly charts that should propel the stock further into coming out of this bearish trend and then restarting the strong uptrend. And Bharat Forge historically has been a stock which goes into multi-quarter, multi-years of uptrend whenever the breakout happens for the stock on the weekly, monthly basis. So we just need to wait out for that pattern to play out for Bharat Forge. But as of now, seems to be an emerging breakout candidate over the near to medium term.
Okay, all right. Now we'll shift focus to okay. Let me Sudeep, let me ask you one more question with regard to how you see IT shaping up, because we've seen that sector as a whole, and we've taken Kunal's views, but give us your take on the fundamental side. IT at this point, we've seen a correction from the highs. Valuations versus 5-year averages look much more somber, but there are plenty of challenges. How should one play it at this point in this environment?
Asha, you absolutely summed up right. There are still plenty of challenges. Yes, the valuation looks much more reasonable compared to where it used to be, but the challenges are also real. There are some good noises coming out of US in terms of H1B, in terms of the growth potential and things like that. But still, the order flow hasn't started. There are still uncertainty as far as US economy is concerned. And as we know, a significant part of Indian IT companies' income does come from US. And there are a lot of uncertainties around that. Also, the artificial intelligence is making the scenario much more competitive for Indian IT companies. And there is a pressure on the margins. Unfortunately, our companies don't have their own products, and they have to use third-party products for delivering AI-related solutions, and that is not a very favorable from margin point of view. Under the circumstances, I will be careful about Indian IT companies, even at current valuation. They will probably continue to perform and show low single digit to kind of a growth in the near term. And we'll have to wait for things to settle down and clear signals to emerge before I venture into buying large cap Indian IT companies. Of course, there is potential in some of the mid cap, small cap IT companies which are catering to niche segments like travel and tourism. I have been favoring rate gain technologies for quite some time, and I still do like that. It caters to travel and tourism segment where there is a significant worldwide growth happening. I like Forge, again, niche player catering to segments which are showing significant growth. So you have to really go and pick up IT companies which are catering to segments where there is significant growth. Other than that, general IT service providers, it's better to stay away.
Yeah, makes sense. Sudeep, that really brings me to AI and the derivatives that you have at play here in India. I mean, what's the best play to actually try and get a piece of the AI pie? Do you think it's going to be via data centers? Is it really via the power ancillaries? What kind of exposure can you take?
Aisha, actually, if you ask me honestly, there is not really any good proxy for AI play as far as Indian markets are concerned. A lot of companies are talking about data center is by and large a real estate game. And, we see the real estate players getting into data center. And I think the valuation already has reached level where I don't think there is much joy there. I would rather go into the power sector. One of the reasons is AI, but that's a very small reason. Overall, we believe that Indian power sector is going through a structural change. And this positive development is going to continue for the next 5 to 10 years. Every segment of the power sector is going to benefit. Forget what is going to happen tomorrow morning or next month. But if you take a 3 to 5 year view on power sector, I think every company, every well-performing company will benefit. So you take the power generating companies like an NTPC. I think it's an excellent buy from a long-term perspective. You take the power financials. I think the kind of capacity which is being set up by the power companies requires significant amount of financing, and commercial banks will not be in a position to cater to that requirement. So the power financials, whether it's REC, PFC, and IREDA, I think they will benefit significantly from incremental business volume. So these can be looked at. Power ancillary, of course, is doing well and will continue to do well in the near future as well.
Right. Okay. That's, of course, what's happening in terms of the AI plays here in India. But today, of course, you can't get your eyes off from Muthoot Finance. It's a solid 10% bump up on the stock for Jubilant FoodWorks as well. The same-store sales growth has impressed the street. That stock holding up well. Bharat Dynamics, of course, like we were just looking at, not just the earnings, but that sizable order as well that they've recently won from the Ministry of Defense. NBCC has made a comeback, even though the numbers were not all that great. The numbers were a little disappointing. 4.5% off a jump up. And then look at Idea. It's already on its way to, cruise past the double-digit mark. It's looking upwards and trying to notch up to that 11 rupee per share level. On that note, in fact, we're going to take a break. But when we come back, we'll continue our discussion with Sudeep Bandyopadhyay as well as Kunal Pothra. So just looking at the screen right now, there's of course Adani Enterprises which is holding out, SBI which is looking good, Bajaj Finance, Dr. Reddy's, Geo Finance, Trent after getting extremely beaten down, it's finally circling around those 43.80 odd levels on the futures. Axis, Adani Ports, Asian Paints are some of the other names which are also going out. But the true story today is in some of the earnings reactions, be it a Muthoot or be it a Jubilant FoodWorks. But Sudeep, I guess the question is how much more for both gold as well as gold financiers?
Well, I think the potential for growth is significant. Let me be very clear here. Yes, there was a bump up as far as their business is concerned because gold prices went through the roof. Things have started stabilizing, but I think the scope for gold loan business is huge. The acceptability of borrowing against your gold has also significantly increased, and that gives further opportunity for the gold loan companies. There has been a generally aversion from a lender's point of view to give unsecured loans because this entire unsecured loan came under a lot of pressure, whether it's a microfinance, whether it's otherwise MSME unsecured loan. And we see that as far as all the relevant lenders, including banks who had significant unsecured exposure. So under the circumstances, lenders are also preferring to lend against securities. And the two securities which they look for is either property or gold. So one segment is a typical loan against property. The other segment is gold loan. Now, gold loan is much more liquid security from a lender's point of view. I think that they would prefer any day. So that's the reason we see significant expansion in gold loan book for multiple banks who are in southern part of India. And of course, the typical gold loan companies like a Muthoot, Manappuram, including India Infoline, they also have been expanding the book rapidly. Muthoot numbers were pretty good, much better than expected. But I strongly believe that they still can perform even better going forward. And a little bit of coming down or softening of gold prices will not affect their growth in any manner.